So this $2,000 stock is cheaper than this $200 stock. If that doesn't make sense to you, you need to watch this video.
Hey, y'all, come look at this.
Now, today we are going to be looking at one of the most talked about, but in my opinion, I feel it's one of the most overrated parts of stock analysis, and that is the share price. Now, the share price is very visible. You see it on social media, you see it on Google, your broker shows that as a large figure on the screen. And if any two people are discussing about a stock, more often than not, they are looking at it from the perspective of the share price. But what if I told you that the share price tells very little about a stock? So to explain this, I would like to cite an example. Now, if I give you $100, one note, $100, and I give a friend $200, but in $1 denomination. Now, if I ask, who did I give more to? You won't look at the denomination to make the choice. Yeah, you won't say because I gave him a $1 bill or $1 bills to sum up to $200, I've given him lesser than I gave you one note of $100. Rather, you look at the big picture. Now, the share price is one note. To understand value, you don't look at just one note, look at the big picture. One of the ways to know the big picture in this case is the market cap. Now, the market cap is simply this share price multiplied by the number of outstanding shares. Now, you don't look at the share price alone, you look at it in light of the number of outstanding shares. And in our example, the $200 stock is currently worth a little over $2 trillion, while the $2,000 stock is worth a little over 100 billion. So if you look at it from the share price, you would have made a mistake thinking the $200 stock is cheaper than the $2,000 stock. But by looking at the market cap, things get brought into the limelight. You see things in perspective about which one is cheaper and which one is more expensive. The market cap, however, does not tell the full story about a stock. There are other metrics you can use to know the value of a stock and in relation to another stock, which one is cheaper and which one is more expensive. One of the values to use is the price to earnings ratio, another is the price to sales ratio, another is the price to book ratio. And some people look at it from the perspective of the balance sheet. They look at the assets, look at the liability, they look at the current ratios, they look at the debt, the net debt, and stuff like that to understand which of this stock or which stock is cheaper. Now, after looking at this, it's worth noting that you should not compare apples to oranges. What do I mean by this? When trying to check the value of two stocks, you don't compare two stocks in different industries or different sectors. You look at two stocks in the same sector and compare them with each other. For instance, you can't compare Tesla with Amazon. You can't compare Mercado Libre with Microsoft or Alphabet. So you look at two companies in the same field. For Tesla, you can compare it with NIO, you can compare it with Fisker, you can compare it with BYD. For companies like Amazon, you can compare it with Etsy, you can compare it with JD, yeah, you can compare it with Mercado Libre, you can compare it with Jumia. So look at companies in the same sector to make your comparison. So if you like this video, don't forget to like, subscribe, and turn on notification. We have very exciting videos explaining terms in the stock market, trying to bring the newbie to someone good enough to make investment decisions. And lastly, nothing in this video constitutes an advice service to buy a particular stock or another. Everything we're trying to do is purely educational. If you buy a stock and it goes south,
You get it? If you don't get it, forget about it.